Good afternoon. This Tuesday, October 29th. Well, in the words of Joan Rivers, we've got to talk. Cattle futures today, the close in live cattle was very bearish, and I'm going to show you why. We're going to zoom out. I want you to notice today's closing bar. Okay, let's zoom in. That is what you call an outside day down. We traded above the previous day high, below the previous day low, and closed below the previous day low, giving us what they call an outside bar down. Now you might think, wow, what's the big deal? Well, let me show you the big deal. The last two major sell-offs started with an outside day down. See this one here? Back at the end of July, we had a higher high than the prior day, definitely a lower low than the prior day, and closed below the prior day. Granted, the next day there was a bounce. It kind of stalled for 2 days, then she fell out of bed. Now let's go back to the late March. Outside day bar, higher high, lower low, and a lower close in the previous day, followed by a free fall. So this implies trouble is waiting here. Now we could get a bounce. I heard today late that Tyson was bidding, I believe, 190, yet the market for October cattle closed near the lows of the day. But tomorrow's trade will be interesting. Like I've showed you before, we could hang around for a few days, but there is trouble lurking here that would throw in an outside day down like this. Feeder cattle, now January is on the continuation chart, and November, when it came on here, in this recovery, feeder cattle never performed like live cattle. All we could do was an exact 62% retracement from the latest high, the July high, not even the highest high or last fall's high. All we could do was 62% retracement. The January came on, November was holding the purple line, January came on, banged around at it, and now itself also put an outside day down. Without any recovery quickly tomorrow, you are breaking moving average support. This was a spike recovery. This was a spike bounce for a few days, then implode. So however it plays out, it's still a negative pattern. And I will say if we go straight to the January feeder cattle contract, never made it to its downtrend line. Again, weaker than live cattle. Live cattle went on through their downtrend lines. A 38% retracement says we're at least going into that 238, 239 range. Or if this thing wants to get deep, because January is spot for active contracts, we could go as deep as the 229 range, 228.31, I believe, is a 78% retracement. So we are setting up for something here. There's trouble lurking. What evolves through it, I guess we'll find out. But the charts are talking, and let's just say they're not happy on the bullish side, even though it seems bullish out there in the field. Now, speaking of field, let's go to the beans, wrapping up harvest, but yet beans are breaking down. January beans are different than the November contract, as the November contract was narrowing up basis, but today it gave it up. We likely had a wave 3 low in August. We worked out an A, B, C 3-wave rally to a wave 4 top, and since then we are just working straight down in a 5. Now, interesting about the 5, and it could measure to 920. Wave 5 is now January beans inside the daily continuation chart. November beans bottomed when they were on this chart just above the 78% retracement of 965. Now, Jan beans could lose another 14, 15 cents in here. If they can just kind of hold this area, it could still be more of a positive chart on the continuation chart, which is a longer-term view of beans, saying that the low in August was significant. It was wave 5 of wave 3. We want to work some kind of wave 4 recovery into the winter. Who knows? This could be December troubles when the bean crop gets in Brazil and it dries up again. It happens up here a lot. Planting gets in and July 4th becomes a problem, doesn't it? Well, July 4th down there is January 4th. And so we'll see here. Maybe some kind of a bottom works in or not. If we do close below 965, then the lows near 940 are questionable, meaning Jan beans could take a run at 920, putting more of an equal wavelength down here. So beans are definitely the dog. Now, bean oil, it's going to have to be on meal because soybean oil is trying to work something different in the world markets. We have palm oil climbing to its best levels of the year. The canola oil, which I will show shortly, also doing well. Bean oil, working 5 waves up off there. August low, 1, 2, 3, 4, 5, and then an A, B, C, and now another B up potential, C wave pullback. Either way, this is working on a wave 2, or wave 2 is already in. If we look at trend line support, also significant, just under the market. but we're waiting on our Z45. When's the Treasury going to give it up? Obviously, not until after elections. It's causing grain companies to hesitate on wanting to acquire beans for the bean oil until they know where they stand on Z45. That's a problem out of the government here that needs to get rectified. But if bean oil is going to hold here, we can start another leg up on soybean oil, which will be friendly for beans, with meal, of course, being the dead leg for right now. But look at canola. Canola performing well. Remember in mid-September, China was never going to buy canola again from Canada from tariffing their electric vehicles? Well, look what's happened since. Pushing higher, and with today's close, why would we not think it's moving on higher? It got hit with crude oil yesterday, but recovering smartly today, even with crude oil backing off from overnight gains. Canola wants to lead. Veg oil products want to go up. That is helpful to beans, but it depends on how bad meal wants to be on the crush side. Corn, well, wave 2 may have bottomed at the 50-day moving average. 2 days down, opening a third day, turning up. You've got a 1, 2, and then 1, 2, 3, 4, 5 into our 1, which basically is a 1, 2, and then a 1, 2. Your first bottom after a major round usually takes a false start. So that's why you get the 1, 2, then a 5 wave up into our 1. Worked a wave 2 to 97. Now we're trying to work 5 waves up in a wave 3. 1, 2. We've bottomed. We're heading into 3, which should extend farther than just through the 144-day moving average. We stopped last week at the 100-day moving average, so now we got to get over 424 to imply something good is happening here. Continuation chart shows we're getting back above this purple line. This purple line is quite interesting. Once it was above here for a while, it was friendly, but the longer-term 200-day moving average green line stopped us. Stopped us again here. So if we can hold here for another day above 14, we've got to run then at 432, possibly 434, but that's after we get through 422 to 424. So it's every dime, folks, is what it comes down to. Also, if we measure into the winter, this is probably the March contract, we should do an equal leg from here, and also to this leg takes us to 468 to 472. Of course, the third leg up here, this should be longer than this leg, but minimum is to 468, 472. Looking at the intraday 2-hour corn chart, even like that 1-day chart I showed you, get above 414 tomorrow. Hold here a couple of bars through the night session. It starts the progression of the next leg up. Let's go to wheat. Some observations. Wheat ending stocks, probably already know this. This includes Argentina, Australia, Canada, EU, Kazakhstan, Russia, Ukraine, not China, because China uses all their wheat. We don't use them in the world maps. But overall, combined ending stocks, lowest we've seen since 2012. And stocks to use ratio, by how that would calculate it, lowest since 2006. Somehow, some way, once Russia is done flooding the market with wheat prices will rally. And so with that, we show you Chicago wheat. Turned up today, not an outside day, but a key reversal day. We did not take out the previous day low. We held it by a quarter of a tick, but closed above the previous day by a tick. Possible setting us up here with some potential turn. We've been looking for this ABC pullback. We did say it could probably go to 540, 550, but I'll take anything for a bottom. 62% retracement comes in at yesterday's low. Maybe that was our ABC of C of wave 2. And we maybe have something going on to the upside here that gets going into the wintertime. Wave 2, possible in. I'm going to show you this blue arrow. This is our 6-day cycle. 6-day cycle. Low came in early by a few days. Well, maybe the low came in early by a few days as well. Last 6-day cycle part of that was a high. 6-day cycle here was it already had impulsed higher, pulled back into it, and took off. So if that was a low yesterday, I'm not saying it is, but it would sure line up with an early bottom like our fall occurred. But at some point in time, Algeria is tendering right now. We get to get a real look of what the wheat price is out there because Russia is now doing it directly with the states, direct state government funded operations, and it's hard to see their true price. So something will start to develop that we can see wheat moving higher, and this will be helpful to corn as well. This is Eugene Grainer with Heartland Investor Capital Management. I hope you find this information useful.